Good afternoon, everybody. Welcome to the Friday edition of the TraderMerlin show. Hope you had a great trading session out there. Not the day I wanted to see a start to that shooting star formation on some of these indexes. It was pretty rough, to say the least. So let's do this just before I just got the message from Don. So we will start on Don's show at 3 p.m. So I'm going to wrap this up about a quarter till. So we'll do about a half hour to 45-minute show today to wrap things up. Then I'll be on Don Fran's show, and I have no idea which direction that's going to go. Most likely Don will steer that conversation, or you or his viewers, so you can check out the Don Fran channel. I'll be over there at 3 p.m. So, you might be wondering why I chose this graphic for today. Don't worry, we will go through all the overall markets, but there is something peculiar about the month of September, and I wanted to run through that. Historically, it is the worst performing month of all of the 12 months. So, I'm a creature of habit, and if I see a pattern that repeats itself, you do have these things like sell in May and go away, the Santa Claus rally, and all kind of stuff like that. I will err on the side of going with that mantra. So in this case, when I look at the statistics, and I'll show you here in just a second, the statistics show that September is historically a pretty bad month. Now, that doesn't mean that it needs to be this next month, but the previous two, I think we had a down 9% in 2022, 2021, I think we're down like 5%. So let's see if that does progress and we get another negative month. So as I should have started off with, cheers, everybody. We're going with the ending of an era. There's a little distillery over in Santa Ana called the Blinking Owl Distillery. It's the end of that bottle. We were finished one off. Got some more room in my cabinet, so we'll have to see what new one I find in there. But cheers anyway. Happy Friday. Hope you all did well today. Did better than my holdings did. I'll explain my trades that I did on the S&P. We'll talk about the Russell setup, which I actually added more to today. And we'll also talk about my Fortinet trade once we're done with the September discussion. So let me get a sip. Ooh, and we'll go with that one. So starting things off with, I want you to look at three individual charts here because I think they're very relevant to what goes on in September. So here is your average percent up or down. Now this goes all the way back to 1928. So you are literally looking at, 95 years worth of data. Pretty impressive. So here you have the overall performance. And what's interesting is, based off this, it actually looks like May is the worst month because it says average percent up or down each month since 1928. May has a 3% average up month, but an average 4.7% down when it's down. So, I'm not that bad, John. Well, we're okay. I'm totally fine with my shorts, and I will tell you exactly why. So, if you look at September, it is on par to be. It's tied for the worst. October, September, and May are the biggest drawdowns. So that's one interesting fact. So the average up month is 3.2%, and the average down month is 4.7%. So if we do get a down month, most likely it will be a severe one. The total up or down each month, meaning over those last 95 years, how many have we had? And you can see here we've had 42 up months. It's the worst performer by far of all of the other indexes. Everybody else is over 50 at least. The September reading, though, 42 times there has been an up month, 52 times it's been a negative, which again is part of the reason I was building my short position. And there's one other graphic here, which is the average percent change each month going back into 1928. So the average for September, and there's conflicting data on this. This is per Standard & Poor's, shows that the average is down 1.1% for the month of September. Now, I saw a lot of statistics going around saying that the S&P is down on average 0.79%. Some of you may have seen that statistic out there, and I believe that's since like 1958. So they're cutting off a little bit of the data to get a better number. All in all, September is a negative month. Period. I mean, not every month, but over the course of the last 90 years, it's been a negative month. And when I look at some of these charts, especially this bad boy, I look at the way we're set up. We've had some pretty big, nice upswings. I think we're due for a correction. I think that there's still a lot of negative stuff on the horizon. I'm definitely taking a gamble at this by going short on the S&P and going short on the Russell, which of course was up big today. Russell was like kind of shocking, but it actually came right back to an overhead supply level that we talked about on yesterday's show. And what might that be? Let me bring up the Russell here, and here is your chart for today. So as you guys know, if you were a shorter term trader, so if you were a day trader, you wouldn't have made a trade on the Russell today because it did not meet the entry requirements that we talk about so often, right? What is that requirement? It needs to open above the yesterday's low and then drop below it. So if you're using kind of my rules for shooting stars, you would have done this. You would have put a line right across the low here, and said if it breaks 1900, then go for it, go short. Well, today, you wouldn't have made a trade, right? It just shot straight up. But I also have been thinking that this area back here that goes back into August, August 11th and 14th, was an area of supply. So I have a stop loss at 1945 right now on my position. So, I think there was a question that came in from someone out there that says, could you, explain more of your rules for this trade? While I'm definitely biased that we're going to have a little bit of pullback, whether it's September or October, doesn't matter. I will be exiting this trade by the third week of October because I don't want to go less than 30 days to expiration. So that's my main concern with this one. I did want to have a stop loss on this in case I'm terribly wrong. Hey, Don, see you in 50 minutes. If I'm terribly wrong on this, then yeah, I'll just take that heat and get out on this one. But I do feel that there'll be a bit selling pressure going through September and October. Granted, we had a great start to September for the Russell. The NASDAQ wasn't as great. It was down 0.16%, and the S&P was just barely break even. There's your S&P. So, if you talk about shooting star formations or weakness, the S&P is really conveying much more weakness because it was up most of the session and then came crashing down and closed near those lows. I definitely like my short position on the S&P. I may add to that on Monday if we start to drop down below this low right here. Let me, for the podcast if they can't see it. If we get down below 4,500, I will probably double up on my short position on the S&P. So right now I have 80 puts on the Russell. As it was in that overhead supply, I bought 40 more puts on the Russell, and I did not buy more on the S&P today. I'm going to wait until I get a little confirmation and not go too heavy yet. If it does start to roll over, then I will build and hopefully get a much bigger position and start the month off right. But we'll have to wait and see. For a big reversal is big chop. Look at let's go here intraday. Right, you had this really weird swings early on in the morning, and we could point the finger at economic data, which we'll look at here in a little bit. But you had significant swings. I was loving this when all of a sudden it cratered down right around 8:50 this morning. I was like, oh, here we go, we're gonna bottom out, let's go. And then it kind of stalled and hesitated. Where did it bounce off of? That area we identified as demand on the 30th of August. Right, so you have that 2 days ago. It came right back down to that little area of consolidation, then ripped out of it. So, there you go. Heck, just jump in with both feet. No, I don't feel that. Again, it would be foolish of me to go all in right now just because, there are so many arguments that can be made for a bullish market. And when you have the data that came out today, you have ADP non-farm employment numbers, you have the core PCE price index numbers, which are, in line with expectation yesterday. There's a lot of really good info. Here's the economic data for today. Average hourly earnings, that was a negative. So, right, so they decreased by about 50%. Average hourly earnings went from 0.4% to 0.2%. Not the end of the world. Non-farm employment change was really good. It means a lot more people are getting jobs, right? We way past expectations of that. So you've got a slightly negative piece with average hourly earnings, a really positive piece with the unemployment change. Unemployment rate, there's your little bit of a red flag. So they expected it to stay at 3.5%, and I've been talking about this quite a bit. Remember Jerome Powell at the Jackson Hole meeting last year, not the one that just happened, but the one a year ago, said expect pain. He said expect there to be some unemployment surges, and we got a little bit of a surge today. Not saying that this is, catastrophic. Again, I feel that if you're down below 5%, you're doing pretty damn good from a historical perspective. Right, here's historical. If I go out here, as far as this data will get me all the way back to 2004, if I go to 5%, I think we would all agree that 5% isn't the end of the world. It might seem a little bit high, but it's nowhere near the unemployment we had back in 2009, 10, 11, 12, 13, 14, 15, right? So all in all, not bad. If we get to, 4%, 4.5%, great. That's fine. Still looking good. So it's not great that we see that spike up today in the unemployment numbers, but all in all, it's not that detrimental to what's going on with our overall markets. Now, some of the other stuff that is not good is we have been consistently below zero on our manufacturing PMI numbers, ISM manufacturing prices, and PMI. So that's not great. And finally here, you had construction spending. increase more than expected, which we want to see that. That obviously means more economic growth and expansion and confidence in the real estate market as well and housing. So all in all, there's a lot of data points here that could give you both a positive argument and a negative argument for our markets going forward. So that's big why I'm not going all in yet. I hope to. Let's say we get fast forward another couple weeks and I see these markets, the Russell and the S&P, if they start to make some new lows or start trending lower, I'll be adding to it. And it would be great if I got to mid to late September and I was to tell you that I am all in, short on this market as it's rolling. But it would take a lot more downside movement for me to make that statement. So now just tickling the market right now, 80 on the Russell, 20 on the S&P, and the next addition I'll probably make to that will be on the S&P, which looked weaker than the Russell did today. Now, as far as the data speaking volumes, remember we had that unemployment number jump from 3.5 to 3.8, and I think that made traders believe that at the next meeting, which is on September 20th, we're going to get a pause again from the central bank. And that jumped to 93% today. We were at 89 yesterday, 88 yesterday, so we increased about 5 percentage points probability of rate being paused. Market says, I think the market wants a slower economy so that rates stop going up. Yeah, and this is where you got to look at the design of markets are built to go up over time because you have economic data starting to get worse, right? You're like, okay, unemployment numbers are starting to surge. GDP wasn't really great. Inflation is starting to at least slow down to flatline, albeit a little bit more elevated than we want, but those are factors which aren't great for the market, but the belief is now, the Fed can pause a little bit here. And maybe if we get to a point, they'll cut rates again, and that would be juice for the market. So it's like a win if you do and win if you don't for the equity markets. But overall, I think you'll see just a little bit of a pullback. Again, I'm not expecting a crash. I'm expecting a little bit of a pullback, let the markets decipher it, and then we'll see what happens on September 20th when Jerome Powell and his cronies get together to make statements about rates. And Liz said, light volume heading into the holiday weekend with no quality zones, not near equals chop. Exactly. And that's why I think I wrote that in the description for today's show. Today's session, relatively choppy. I mean, there were some pretty big swings. And Biden was speaking, but I don't listen to, I apologize. I didn't listen to Trump when he spoke. I don't listen to Biden when he speaks. I think it's all a bunch of lies and BS, regardless of which political party it is. So I don't waste my time with it. I'm really more about just what price is doing. So, all right. So I got those three charts out of the way for you. That really kind of is setting the stage for what I think may happen over the next couple months. So, as I mentioned, the put options that I'm buying are for the third week of November. Now, I thought about going all the way out to December to give myself an extra 30 days, but ideally, I want to be out third week of October. It's my birthday week. I like to always kind of have closure to some of the bigger trades I'm in, so we'll see how that all pans out. We'll see. I hope it's not as colossally wrong as my massive put purchase plan I was going into back in 2020. I wish that one turned out the other way, but it didn't. So, oh well. Okay, Tom says, manipulate the markets down in September, manipulate a Christmas rally in December, as my old saying goes. I like that. I like it. I think we'd all agree that it's pretty much manipulated regardless. So just go with what the price tells you, and if you're wrong, get out, move on to the next trade. Hey, you see, it's funny you talk about Biden speaking or mumbling. What about McCarthy? You see him? Was it McCarthy? Who's the guy who's pretty much walking dead? McConnell. You see Mitch McConnell? I'm sorry, man. You got to get rid of that guy. He's the walking dead. He's a zombie. They asked him, what are your thoughts about running for re-election in 2026? He's like, staring off in the camera. He's having a moment. That guy needs to retire. Go relax and enjoy your life and get away from a podium and quit trying to run our country. You do not stand a chance. You're not doing it. Yeah, McCarthy. Unbelievable. That guy needs to be removed from office. You can't make effective judgment when you can't even answer a simple question like, what about your re-election thoughts in 2026? Hello, I'm a zombie. Anyway, let's go look at a trade. So I received a couple questions on this. Let's go to FTNT. Right, so this has closure today. I wanted to really wrap this one up and give you guys exactly the numbers that happened so you can see. I received one question. I didn't get a chance to put it in here. Take Feinstein. Yeah, there's a few. There's a few people that should be gone. There should be, look, you have to take a test. When you get old enough, you have to take a test if you can drive a car or not, because you risk the lives of people. I would make the same argument that as an elected official, you're risking the lives or at least the financial well-being of people. And it shouldn't be, oh, this is a Democrat or Republican thing. It should be, hey, can you answer these simple questions about basic things that you should understand as a politician? If they can't answer that, get them out. Move. Automatic rejection from office right off in the sunset, because you and I are paying for them anyway, and their health care going forward. So it drives me nuts. So here's Fortinet. This has been a running trade for 3 weeks that I talked about with you guys, and kind of really, physical and psycho. I think psychological is probably the biggest one. But man, it's just kind of crazy to watch that. The constituents would still support that guy, knowing that he's just on his last legs. I mean, come on, let's do him a favor and let him just relax. So Fortinet, how did it all work out? As you guys know, I was doing this a while back. This was 3 weeks old. On August 14th, I sold the Fortinet $58 puts, collected $1.05. I was happy with that one. Loved it. Why are these guys getting voted in? Well, John, he has been in office for a long time. Mitch McConnell, has been in there for a long, long time. Then I was put those shares at $58. So I immediately sold calls against it, covered calls, $59, collected 57 cents. Well, at the end of that week, it closed below 59, so I still had my 500 shares. I resold puts again on Monday at $59.50. I collected, a little bit less than 1% for 5 days. I'm totally fine with that. This was not meant to be a home run trade. And I want to make that clear. Some people have been giving me grief, like, why did you do this? And you should just held on. It would have been better. And I'm like, no, I don't need to. So here is the final result of it, because as you know, you can see the chart right here. Fortinet closed at $60.86. Now it's dropping in the after hour session, but if I was to hold it and not have sold those calls, I would still be in it. So let's look at the difference there. At least number one, what is the overall rate of return and how this specifically panned out? Because I've had multiple questions on this one. And then I'll answer the question of, why did you sell calls against it? You would have made more money if you just kept Fortinet. Okay, fine. Let's address those. So here is what the numbers ended up being. As you can see by the list here, I bought it at 58. I sold it at 59.50. Now, I didn't have a choice. I sold the calls at 59.50, which means they're automatically taken out of my account. So I collected, as you can see here, by these 3 expirations from the 14th to the 28th, I collected $2.13 in premium. I also collected $1.50 in gain. That's $1.50 on those 500 shares. So when we look at the total number, I collected 700 and, let's see, let me get my numbers 100% right here. $750 in actual gain on the underlier, and I collected $1,065 on the premium alone. So that's, right around call it $2,811. Not $2,800, $1,800 worth of profit. So rate of return wise, $1,800 worth of profit divided by my initial capital outlay was a 6.26% rate of return for 18 days. So that is how this all panned out. Now, obviously I would have loved it today if we closed at $59.49, and I would have kept my shares and then sold next week again higher and higher and let this thing run. So the question, I think, it has came in from one individual, but some of you might be asking this one as well, is why didn't you just keep it, right? Why sell the calls against it? Because in this case, in the account that I'm using this one in, I'm really designing, it's built to generate income at a goal of 1% per month, right? That's the goal. As Lisa said, the wheel worked beautifully. In this case, it did, right? I mean, I don't think anybody in here would be upset making 6.26% rate of return in 18 days. This one worked out. I've had others that don't work out, and that's fine. I have stop losses in place. But to the question that came through, and I didn't have time to draw the graphics for this, but if you look here, you can see that this $1.50 worth of gain, if I didn't get stopped out of it today, meaning my shares weren't taken away, I would have made an additional $1.30 because it closed at $60.87. So it'd be $1.37. I had 500 shares, so $1.37 in half is right around, let's say, $650. So I would have made $650 more, which would have increased my rate of return, right? However, remember, I take away from some of that because I also sold these calls. I collected 51 cents. So, well, some of you may think, well, that you could have made more if you just left alone. I was consistently lowering my dollar cost average. And if this didn't have a big run like that, I would probably still be in it and collecting more. And I would continue to sell these calls at a higher price, a higher price, a higher price. I am happy those shares were taken away today, right? I'm happy. It's totally fine. I collected literally, it was about 0.9%, so almost 1% rate of return since Monday on these shares. And then the last week I collected 1%. And the week before that I collected 2%. Compounding it, I'm looking about 6.26% rate of return. I think as a trader, this should be our goal, is to have trades like this that you're consistent with. Now, this wasn't a monster trade. It's only 500 shares, right? So you're only talking $1,800, but I'm sure $1,800 would make a big difference to some of you in an 18-day window of time. You're looking at, analyze rates of return. They get pretty darn tasty when you have that. So let's see. Tom says Fortinet as an enterprise, IT security enterprise is always way overpriced, but corporate types buy for reasons. I wouldn't pick it, but it should be good sideways play. So, the reason this was drawn to my attention is I really like Larry Jacobson's analysis that he did on the show last time he was on. And let me bring up Fortinet. So when Fortinet went through their earnings and just got absolutely crushed, it dropped from, $70. And when Larry was on, he was doing the analysis up around 80, I think. Then all of a sudden it drops to 60. Well, I'm looking at a 25% discount to the valuations that Larry was like, I liked it at 80. So for me, I did struggle with this one. I think Big Eb, you did as well. There's that struggle of, do I want to buy this and be a long-term investor, or do I want to buy it? If it goes up, I'll give it a little bit of a leash, right? And that's what I did with these covered calls, is I just gave it a little bit of a leash. Unfortunately, it just rallied a little bit too quickly. I didn't expect to see what happened on Tuesday. Tuesday was a really big pop. Here's the chart for you. You guys can see this little spike right here, ripped up. Why did I get so much premium for the week? Well, because it was just above my strike. I sold the 59.50 calls, which was just above where price was that day. So all in all, I'm content with it. I think it's good. And as Lisa says, the wheel works beautifully. Yeah, and I think you're going to have bad trades in a wheel strategy every now and again, but I think slowly compounding and rolling those things is a very good strategy. So I wanted to share that one with you, just to be transparent, since this is one that we've been tracking for not a long time, but the past few weeks. Anyway, there you go. There you have it. So out of the 4 trades we talked about the other day, or on the 18th or 14th, on the 14th when we started this, there was a Tesla trade that I was in. We had 2 silvers and we had the Fortinet, and the silvers and Tesla closed last Friday. And these ones are done. So I do have silver in other accounts, but those don't have calls against them. This is quite a form. Good trade over. Oh, thanks. Love to employ your expert insight. All right. Well, I don't know, Webb. You can email me at TraderMerlin@gmail.com if you need some help with something. I am definitely a crypto aficionado. So that's it. What I'll do is I'll also, I guess going forward, we'll just keep discussing what's going on with the IWM and with the SPY. I don't really like the IWM chart today. Obviously, that candle was a bit too abrupt for me, the big jump. However, I do like the fact we've got a second shooting star here, but I can't be so over bearish that I ignore the upside potential here. We may have just pulled back into an area of demand and now be ripping out of that. So that's why I've got my stop loss in place at 1945 for the IWM. Sorry, not IWM. For the stop isn't based off IWM, it's based off the Russell futures, because the Russell futures show me this area of supply right here, whereas the IWM does not. Right? We had this real sharp sell-off, sideways for 2 days, and then aggressive sell-off for the next 3. That's what I'm using as my backstop on this one, so there you go. So all in all, I'm okay with it. I don't like that we had the big update today, but it's fine. If we get to 1945, this trade overall will cost me probably about $3,000, but that's not the end of the world. And let's go look at SPY, because that is the one I like the picture of better today. Now, this is why I like looking at multiple angles. You guys know the SPY does not include the pre or post market. You don't get a true 24-hour read on this bad boy. So while it looks negative the last 2 days, well, it's actually been positive the last couple of days, right? These red candles, well, it's been moving up. If you look at the S&P futures, though, you get a really nice looking shooting star there. And I wish these markets were open tomorrow. I really wish they were open, because this it feels like it's the third day in a row it's rallied to new highs, but given it all back. And they become more extended. And in my opinion, when you have something like that, when you have it rallying to new highs and continually pushing higher, but it breaks back down and closes near the session lows, to me, that is a sign that sellers are not having it. They're not letting that rally go. And ultimately what will happen is the buyers who are trying to make money here realize it's not going to be moving up anymore. I'll hold off on my buying. Then the sellers push. So the confirmation will come on next week when we start trading again, if we get below 45.07. To me, yeah, open Sunday night, but close Monday, like kind of weird stuff. But I am definitely excited for this one. Anyway, that's the only real things I've got going on. Silver-wise, look at SLV today. Womp womp. You know, I love when this happens after my shares get taken away. I was thinking of selling some puts today on silver expiring on the 15th, but I'm going to wait. I'll see if it closes some of these gaps that it's had. You know, if I can sell some puts at 21 again and get back in lower than where I was taken out, it's a win-win in my opinion, and we'll see how that one progresses going forward. All right, that's it for that piece. Jeff asked a good question about cannabis stocks, but I need to do a little bit more research on that one, Jeff. Not prepared to do that one today, but we'll get to that one. So I'm going to address something here real quick, and I think one of the important things for everybody is having a sense of community. I would think that there's a good sense of community amongst you guys as well. I know that Tom has done a good job of trying to do things offline. I know he started the Friends of TraderMerlin on LinkedIn, because since I'm a atrociously bad social media person, I know I really should be better at it if I ever want to get this show to any level where there's some monetary income coming from it without subscriptions. But you know, one of the things I did like about OTA is it had a really good community. I'm going to read this question or comment. Neil in the UK says, I was a longtime OTA member from about 2011 and a mastermind member for the number of years. I even won Trade of the Week on several occasions. I really miss the OTA community, both online and in person in the UK. The reason I'm writing is to ask if you know of any other community that comes close now. I would contend, Neil, that the community is still there. You still have the mastermind community. You still have the XLT sessions. There's a lot of people in here who are doing sessions on their own in the mastermind community. So I would argue that the community is there. Now, the UK offices may have shut down, and that's unfortunate. I wish that didn't happen, but you know that's way beyond my level of control, and hopefully that will come back someday. We'll actually get some offices back in the UK. Otherwise, you know, since you are an OTA member, you've already paid for it. So, you know, get yourself back into the mastermind community. Find out which rooms or which groups or which people you like to discuss with. Lisa and Laura, you guys still doing your simple options on Fridays? Yeah. It's the physical office, but the community's still there. I mean, there's still a lot of great instructors. You know, I know Larry and Todd are constantly in those rooms, always trying to give as much as they can. I feel bad because I'm not in there as often as I probably should be, but you know, I've got a lot of other things that I need to do to take care of my own self, so I'm being greedy on that front with regards to my time, although I do this show for free every day, so I guess who's being greedy? Oh, not you, Lisa? All right, well, we'll see what Lori does. Yeah, Don did a wonderful video. I said he was a little critical, but it's okay. Everyone can have their opinions about everybody. You know, it's just like my opinion about that piece of crap trader from Chicago. I'm sure some people love that guy. I don't know why, but you know, everybody has their opinions about everything. So, as far as community goes, Neil, I would say stick with what you paid for. Continue to use that environment. If you want to go switch to other sites, just be careful, you know, and don't be pressured into a group. Don't be pressured into some, you know, membership subscription. You already paid, you know, good money to be a part of one. So I would say be careful out there and check the people that you're investing with, right? If you're going to be spending a bunch of money to go to someone's school, research them, and don't just look at the first headline that shows up. You know, dig a little bit, because there's always going to be people that hate somebody. There's going to be other people who love it. I'm sure I have absolute haters out there that hate my guts. I'd love to talk to them about why. I also have people who think I'm the greatest thing since sliced bread, which I have to ask them why as well. So we're somewhere in the middle. I didn't want to be too positive. You were pretty neutral. There are a couple things that you hammered on, but actually I agree with you. You know, I agree with you on a lot of your points, which is I think I initially reached out to you because of that video. I don't remember. Anyway, let's see. Was there another question that came in here? Oh, one other thing I want to get to, and this is just a technical a way to make sure that you're doing things right. So McGinnis, let's see real quick. I didn't get a chance to bump the font up. I know it looks really horribly small. I apologize. I just copied this over from the YouTube channel, so it's going to be rather small on your screen. My apologies for that. Let's see if I can actually pop this one up very quickly. So McGinnis says, look at the shooting star on the Euro US dollar weekly chart. So I wanted to bring this up just because it's not the right term. And if you go here, here's the Euro USD. There's your daily, beautiful downtrend. Now let's go to the weekly. All right, so a shooting star needs to be at the top of an uptrend. So what you have here is almost like a hanging man, but inverted, right? And the reason that you have a hanging man at the top is because it's not a hammer. A hammer needs to be at the bottom. So I wouldn't call this a shooting star. I actually don't know off the top of my head what that would be called. You know, it's not a gravestone doji or dragonfly doji. It's like an inverted hammer at the bottom of a downtrend. Oh, sorry. Thank you. Sorry. There we go. Chart's coming. You look at this nice big downtrend here we've had for the last 6 days on the Euro USD. Come on, chart. Should pop up any second. We got like a long delay to it. There you go. Thanks, guys. TJ's surfing and I'm drinking whiskey, so that's why we're not getting the charts you need. That is not it's not a shooting star. And this goes back to the point I talked about yesterday when some of these market indexes. To me, this candle is very bearish, but some people will look at this and say it's actually bullish because at some point it rallied all the way up to 1.0943. Right? So again, I could argue this as a bullish thing, as a bearish. Personally, I think that it's bearish because you close at the dead lows. At some point, this was a big red candle, and then it closed right at those session lows. So it's not really a shooting star, McGinnis, but could you trade it the same? I would argue, yeah. I would put a low right across, or a line right across those lows. What at 107? What's that low right there? So where we closed at was 107.73, right? Your low today was 107.72. So it's pretty much the dead lows right there. I'd put a line across that. If you start traversing below it in the next session, then start opening the short. Now, keep in mind that you are coming back into these areas of demand right around 107. So you don't have a lot of meat on that bone to trade that pattern. That's why I don't really like this formation. I personally would not be trading this one. Now, that said, if I saw the candle we have today, let's put a yellow box around this one just so we can have a reference point. If I saw this candle right here, but I saw it at a different location. Let's say I saw it right here on the top on Monday the 17th of July. After this huge green candle, I saw that giant shooting star. I'm salivating. I'm literally salivating over that chart formation, that pattern. I'd be loving it. Unfortunately, it wasn't at that location. They don't always line up where you want them to be, but this is just a matter of personal preference, right? In my experience, I like this formation at the top of a strong surge up move, preferably with really high volume. If it's at the bottom, I'd like to see more of a hammer formation. You have a hammer close right here. Right, you guys can see this where my cursor is. I'll put a yellow box around that one as well. It's not quite at the bottom of a downtrend, but it's sideways. You have this hammer formation. And again, this is why I keep telling you my very, very basic rules. Because if you put a line right across the top of this candle from October 31st of last year, notice the next day it opened up down below, and then all of a sudden it ripped through. Great. It opened below that line. Once it breaks it, you're going long. And of course, in hindsight, we could all brag about what an amazing trade that was, but I didn't take it, so I can't brag about anything. Just showing you the mechanics and why you wrap simple rules around all your trades makes it much, much easier. All right. What else did I have? That was the one. I think that was all I got for today, which is perfect because that'll allow me to wrap this thing up, and then I can get ready to go over to Don's channel. Let me run through real quick what happened for today. Bitcoin continuing to give back every single penny of that pop from the litigation. Let's go back here and go to the daily. Right, Grayscale's lawsuit with SEC. Grayscale wins, and we're now at lower lows. Not a good sign at all for anybody who's bullish on Bitcoin, down 2.06% today. Your NASDAQ was the only index that was negative today, but look at the pattern here on the futures. Right, you've got yesterday was kind of a spinning top formation. Today you've got a long topping tail. It's feeling more bearish. Now, until we get follow through, it's bullish. We have to get some breakdown below, and I would argue that your levels are right there about around 15,460 on the NASDAQ. We get below that, now we'll get a retracement. Now, there was some weird separation, in my opinion, with the dollar index, which I'll get to in just a second. Here's your gold. Call it pretty much unchanged on the day, but notice the same basic pattern. Really long topping tail, closing near the session lows. Some could argue that's a shooting star, although it's a little bit high up the real body. All in all, a positive day for gold, but not the best looking chart formation. It feels like a pullback is coming. All right, we're getting to the top 5 here. S&P was up 0.12%. Again, we've already looked at the shooting star formation. Wait for the break below 4507 on our Sunday open and see how that pans out. Here's the outlier. Look at your day for the dollar index, right? I would have expected these equity markets to be down a lot more after you've had a surge like this on the dollar index. 0.61% move to the upside for the dollar index. That's 2 days in a row of just big gains. Again, that's the dollar versus a basket of security or basket of currencies. 1.29% in 2 days is pretty significant for that dollar index, yet it should have had a much more pronounced effect to the downside for equity indexes. Here's the real surprise for me today, and of course this is the position I'm in. Russell 2000 is up 1.11%. 1922 is where it closed. Hit overhead supply, which I thought was really, really good. I like coming at overhead supply today. We'll see if that holds going forward. If not, I will probably be stopped out next week. And then our final two, there's your 10-year. You saw a pretty nice spike in yield today, 4.18% up to up 1.73% on that 10-year. I actually thought we'd drop a little bit deeper. I thought we were going to go back down around 4%, but we did not do that today. It was an about face. And that's all finally wrapped up by crude oil, which not only broke the highs from August, but is just absolutely ripping. You know, a lot of this has to do with OPEC, OPEC Plus. You've got cuts coming from OPEC and Saudi Arabia. Russia also saying, hey, we want more cuts. And of course, if you are a producer of oil, what do you want? You want higher prices of oil because you only have limited supply coming out of the ground. So the more you get per barrel, the more money you're going to make as a country and as an economy. So it makes sense for Russia and Saudi Arabia and these guys to be doing cuts. That could have an impact on supply. If there's supply cuts and demand increases like we're hearing from China, everybody's saying China is just going to blow the roofs off of demand here going forward. Then all of a sudden you see a much, much higher price for crude oil. Right now trading at $85.50, but if I look at this on the weekly time frame, I still think that there's a lot more upside potential here for crude oil. Do we get back to the 120 price handle? I wouldn't put that out of reach. Certainly you got to look at that $93 level as your next major stopping point, but that's $8 away from current price. So there's still, it's a 10% move. Could be a pretty good one. Do you have any comments on... So, Mike, you asked me about this one, TSLY. So these are relatively new funds, and I don't have a lot of input on them. Basically, these is a managed options position where they're doing synthetic ownership of the security using options and then selling calls against that position to generate income streams. So, when you mentioned there was a really high level of rate of return, I forgot what you said, like 50 or 60%. I'd say if you don't understand options at all and you're looking for income streams, then fine, go with something like this. Personally, I don't trust them. I don't know what they're doing behind the scenes, and I just don't trust institutions. I don't trust brokers. I don't trust market makers. I don't trust hedge funds. I don't trust any of that stuff. I would rather just buy Tesla shares and sell covered calls against it, or go through my own whatever strategy that may be. But there's a bunch of these. They have them for Apple and Facebook or Meta and Google and Amazon. All the real high flyers have them. But I'm not personally a fan. I know others probably are using them and as income generation pieces. You'll notice down here at the bottom, you're getting 83 cents, $1.06. So it's going to vary wildly depending on the month that they had. All in all, it's been phenomenal so far. You got nice bullish markets for Tesla. Going to be good earnings, good income generation from that one. But other than that, I really don't have much input on them. Giselle, good to see you. Go EV. I wouldn't. Oh, by the way, let's talk. Would I buy this one? Giselle, the chart looks like shit. Sorry, I apologize for swearing. This chart looks bad. Like this chart looks like bankruptcy written all over it. I will say I love the Canoe vehicles. I really think that they're awesome. They're so weird looking. I love it. I thought about actually putting myself on the list for one. They're just such a unique, weird vehicle, and I don't care about looks. I like functionality and form. So I might allocate some money to it, but a very small portion because, again, if this thing was succeeding, if they had all their ducks in a row and everything was looking great, do you think the chart would look like this? No. It'd be moving up. I am a big fan of Canoe. I just love their look. It's such a cool, especially the truck. I want the truck, not the van. The truck is what I want. So if you're going to put money on this one, I would say it's a gamble position, right? Anytime you're going to buy anything that has a chart that looks like this, it's gone from $24 and is now trading at under $1. You know it's a gamble, right? I think we'd all agree with that. It hasn't even really based. It's making lower lows still, just not the same rate. It'll probably do a reverse split here. This is a SPAC, remember? So it's not looking good, even though I like the vehicles. I can't say much about the company, how it's managed, how it's run. So if you're putting any money in this, it's a gamble. Now, you guys remember, what was that FSV? FES? What was that EV company? We talked about the other day, and I was like, it's going below 30. FSV. No, damn, I can't remember the FVS. Now I'm drawing blanks. FVS? FSV? No, guys, someone remember. You know this one. I can't remember. It's that Vietnamese one. I'm drawing blank at the top of my head. One of you guys know it. That thing, I told you I got, 60 days before it drops below 30. We already dropped below 30 in 2 days. Thank you very much, Lisa. I don't know, my brain drew a blank. VFS, there you go. Thank you. I mean, look at this daily. Womp womp. This is why you just never get caught up in that hype. I mean, I was looking at some of the fundamentals and it's like, this thing is garbage. And unfortunately, no one's selling options out there. Yeah, I got it. I fooled you with the F again, right? The VFS. Seriously, VinFast Auto. I gave myself until that line, October, to get below 30. I didn't think it happened in 4 days, folks. It just tells you this thing was a pump and dump. And maybe down the road, this will be something. But this is why you just can't get caught up in that hype. This is the typical SPAC. Tom's giving me a hard time, like the Canoe, and you don't like Rivian. I like Rivian. I'm okay with Rivian. I never said I dislike Rivian. I like Rivian. I like the vehicle. I can't get past the stupid headlights, the clown face. That bugs me. No, Rivian's nice. There's a couple pieces I really like about it. But I don't know. For some reason, the Canoe stands out. The Canoe truck looks like a lunar landing vehicle. Right, way better than the Cybertruck, and we'll see what the price point is. Right, I'm not worried about getting 500-mile battery life. I don't drive much anyway. I'd probably have my truck, and if I go on a long distance trip, I'll use gas. But around town, yeah, give me something that's gonna be battery powered. Give me 100-mile range. I'm not looking for performance. I'm not the guy who pulls up the street lights like, hey, I'm putting in launch mode, ludicrous speed with my Plaid. I'm gonna beat you off the line. I don't care. This isn't I'm beyond the age where I have to prove I'm better than people by my vehicle. The Canoe headlights, I believe it's a bar. You're going to make me look it up right now? Hold on. I got to go to all right, we'll do this real quick because I got to get to Don Fran's show. Let's go to, I'm going to see the headlights on this one before we wrap up. As far as next week, guys, I'm not going to be doing many shows. I'll do Tuesday, I'll do Wednesday, and after that, not going to happen. So check this truck out. Come on, tell me that's not kind of cool. I like big cabin space, so I want this space certainly for my German Shepherd, who has just had his birthday today. My baby turned 11. He's an old man now. But I also like having a nice utility bed. Sides fold down. There's tables. There's camping gear. You have all these different sliding parts and pieces. I'm a fan. I know it looks weird, but I do like the headlights. I like the LED. The whole front opens up, so you have a trunk space in there. Yeah, it's different, Something very, very, very different than what's out there. Lots of glass. That thing looks like it's straight off the moon. Maybe the van, but I want something I can throw my e-bikes in the back. So you don't have a dash cam. I don't think you have much of a dash. I do. I'm not that old now, race. Yeah, but see, you're all about performance cars. You're like, I got a Corvette. I got a Tesla. I don't care. I bet you I can outperform you in the mountains. I'll take you off-road and see if you can beat me anywhere in your Tesla. Anywhere. I got 4x4, off-road package, full suspension. Let's do it, buddy. I'll race you, but I don't care. I'm not here to race. Thank you, Liz. Thank you. Yes, he's downstairs crying right now because he wants to go on a walk, I'm sure. I took him for a walk today, and he's getting a little bit old. But anyway, yeah, I like the Canoe. It's a strange-looking vehicle, and I've never really cared what people thought of me for my appearance or what I wear. So I wear what I like. Anyway, I got to wrap up here so I can get over to Don's channel. If you guys have any comments, questions, feedback, let me know. You can email me at TraderMerlin@gmail.com. I would just drive my Bronco. Okay, you get a Bronco too? Okay, how many garage you got there, Don? See, I got one vehicle. I got rid of all my other ones. Got rid of my Porsche. I got my motorcycle still, but You'll be done, Ron, when you're both refuel. Well, Don will beat me with his Tesla with refueling cost, I think. Dog park birthday party with a couple cupcakes? Yeah, probably. Probably go to the dog park. We'll see what time I finish with Don. Anyway, you guys got comments, questions, feedback, TraderMerlin@gmail.com. Again, no show on Monday. I'll be doing Tuesday, Wednesday, and then I'm off for a week where I will be in Jamaica. And I have to give a shout out to Yvonne. Yvonne says, hey, you were cursing. What you said in your horrible Jamaican accent was actually cursing. I actually know that, but I didn't think anybody would mind. So I apologize if I offended anybody with my Jamaican accent yesterday and my rude words, but at least they weren't words that you guys identified. Anyway, have a great remainder of your day. Hope you guys have a fantastic weekend. I'm going to be over on Don's channel here in a period of about 15 minutes to discuss, I guess, whatever questions you have here. Don's going to be driving that one. I'm just the co-pilot on that. So I will see you guys there. If not, have a fantastic weekend, and I will see you all on Tuesday. Take care, everybody.